Imagine investing every spare dollar you had for 13 years and making absolutely nothing. They tell you, just buy the S&P 500. It's a safe haven, but this isn't just a mistake. It is a mathematical trap that is currently ensnaring an entire generation of investors. Today, we expose what the financial gurus aren't telling you, why buy and hold is dead, and what is actually waiting for your money in the coming decade. Most of you started investing after 2008. You are the children of the longest bull market in history. You watched the Federal Reserve print trillions, artificially inflating asset prices. But financial history is not a straight line up, it's a cycle. And right now, we are standing at a point that terrifyingly resembles the worst periods of the past. Welcome to the Lost Decade. From 1968 to 1982, the U.S. stock market effectively went nowhere, but that is only half the story. When you account for inflation, the average investor's purchasing power dropped by 60%. You didn't just fail to make money. By holding safe stocks, you actually became poorer. In the year 2000, Microsoft, Cisco, and Intel were the Nvidia and Apple of their day. If you bought the S&P 500 at the 2000 peak, you only broke even in 2013. 13 years of waiting. Why does this happen? It all comes down to valuations. When you buy the S&P 500 today, you're paying a historically record price for every dollar of corporate earnings. The market is priced for perfection. But look around. Geopolitical conflict, deglobalization, higher rates, perfection is not coming. The S&P 500 is no longer diversified. It is effectively a leveraged bet on 7 tech companies. If one stumbles, the index falls. You aren't buying the economy, you're buying hype. The math is brutal. If the market drops 50%, which has happened repeatedly, you need a 100% gain just to get back to zero. Do you have that kind of time? I'm not telling you to sell everything and stuff cash under a mattress. Inflation will destroy it there even faster. But the strategy of blind accumulation in ETFs will not work like it used to. This new era demands activity, diversification into real assets, commodities, emerging markets, and alternative stores of value. The era of easy money is over. It is time for smart money. In the next video, I will break down the assets that save capital during stagflation. Subscribe if you don't want to become a statistic.